What's going on, everyone? Adam Swartz here, the host of Cool Places with Cool People. I know this might be not the coolest place I've ever done a podcast, but you know what? We are at TaxComp out in Moreno Valley. These are the guys that handle all my taxes, my clients' taxes, my family's taxes. You know, there's two things that people always say in life. You're going to die and you're going to pay taxes. So as much as this is not the most exciting thing to talk about, I really think it's so beneficial. So I want to welcome the two guys that I trust with all my financing is Mike and Joey. Thank you for being on the show, guys.
Thanks for having us.
Thanks for having us. Yeah,
I really appreciate it. So why don't, Mike, you know, this is your dad started this company 35 years ago. Why don't you tell everyone a little bit about who you guys are and how long you guys and what you do?
Yeah, so we're an income tax service, you know, in Moreno Valley, and the most exciting place to be, you're saying, right? I mean, maybe the most boring place to be, you know, the most vanilla, you know, bland place to be is accounting and income tax at that, right? But yeah, it does impact everything that we do. It impacts finances, impacts everything, right? So yeah, we started the company in 84. I say I was a little kid back then, but my dad started it in 84 out here in Moreno Valley, and He had, I mean, to this day, there's things that I see come to fruition. You know, he had great vision. He can run a business, you know, and he's able to see the field a little bit differently, right? Than I think than the average guy or gal, right? So Moreno Valley was set for a huge boom and a huge increase in housing, population. You know, you had March Air Force Base. Well, back then in '84, it was March Air Force Base, like 2 stoplights, and that's it, right? I mean, and it's really, you know, we've had incredible growth since then, but so we started in '84, and the community grew, and our business grew, and there was a need for tax prep. And, you know, nowadays, to say a company is in a specific city or market is, you take that with a grain of salt, because with everything online, exactly. We have clients East Coast, Texas, you know, all over the country, all over the globe for that matter. You know, if you really wanted to exaggerate and make yourself look cool, you know.
Exactly.
But,
well, I mean, that's the whole reason. This thing doesn't look
cool. People, right?
Yeah, cool people, places. Cool places. Yeah. So, how much staff do you have here? How many agents do you have working for you?
Well, so, you know, with taxes, with individual or even corporate tax, right, it can be very seasonal, right? If you're dealing with the preparation end only, you're definitely going to be much busier January through April than you would be, you know, the second half of the year. So, you know, we keep a staff of over a dozen. I think it was 13 or 14 this past tax season. You know, working full time. You know, and then most of them will call it any of the service staff, right? That's support staff is what it is. They'll call it quits by the end of April.
So you more have like a seasonal. So
yeah,
it's like
right. We got a seasonal
like
crew.
all the stores have Christmas seasonal. You have tax season.
Yep. Yeah. Absolutely. And traditionally that's how it started out, right? But, you know, fast forward to today, where we provide services in resolution, corporate tax, tax problem solving, which is a huge industry. It's really part of the legal industry, not the accounting industry, because you're not dealing with the numbers anymore as much as you're dealing with, you know, statutes of limitation, precedent, court case precedent, legislative rulings. You know, you're just memorizing words now instead of adding numbers, you know. But that keeps the lights on all year round now versus, you know, having to store away the, you know, capital for
shut it down until the next tax season. Yeah, you're like the pop-up, like back in the day, I'm assuming it'd be like the pop-up Halloween shops, right? Like all of a sudden it's like October 1st, all these Spirit Halloween, and then November 1st are gone. So Joey's actually the guy who handles my taxes.
Yes.
He handles my S corp. We actually went from LLC last year to an S corp this year. And so Joey, how is it working, you know, in a tax office like this? You know, you could have easily gone to an H&R Block. You could have gone to a bigger company. What was the reasoning on picking a smaller firm to work with, and not a big mom and pop shop, compared to a big corporation?
Yeah, actually, I had an offer, or spoke to an H&R Block manager who was actually offering me the position. I was already working here at the time. They didn't realize that, but yeah, it's working here. It's a different environment. You know what I'm saying? I've known them since I was a kid. You know, just a little pup, and now, I mean, the relationship we have, it's all family. You know what I'm saying? So obviously it's business first, but we take into consideration that we are pretty much all family. You know, so it's definitely a better environment. It's a lot more happy, I think, rather than the cutthroat industry, you know, that it would be somewhere else. You know, if somebody walks in, nope, that's mine. Kind of like sales, I guess you could say, for
real estate.
Exactly. You know, first person that walks in the door, they try to take them as theirs, you know, but not here. We have a system, run smooth, and it works pretty well that way.
That's awesome, man. I think I think so interesting, and we were talking this a little bit before the podcast started, of friends and family who might not want to work with you guys because you do see their incomes, you do see their W-2, especially in this day and age of so hard to people fronting online that you can't lie on your tax forms or your W-2 or your 1099. And so, what is kind of something that you encourage people that might be on the fence, maybe not even working with you, but maybe they do have a close family or friend and they're holding off from working with them and their taxes because of those reasons?
Oh, well, Joe, you want to?
No, go ahead.
All right.
Yeah.
The whole reason, for having a tax service or tax practice is simply for that reason, right? Because, you can go online and file your own tax return, or, order instructions from. Where do you even get instructions from now?
Exactly.
You know what I mean? Obviously, you can go online and Google has, everything that you need there, right, as far as instructions to do your taxes. But having a professional that is staying up on the current legislation this past year with, the 199A or TCJA or tax reform, as everybody calls it, Trump's tax reform, but he actually had nothing to do with writing it. But that was a platform he ran on. So, that he's associated with the tax changes. But just like this past year, tax changes, 2018, if you do your own tax return, 2017, 11040, 2018, completely different. The 1040 is different, the lines are different, instructions are different rules, right? You're going to hear, you get advice from everywhere, right? It's like my butcher told me to do this, the hair lady told me to do that, my aunt told me, nope, I have to do this. And they're all contradicting answers to my one tax question, and I will say it is an industry that has varying degrees of answers for the one same question. I think if you poll 10 different, offices, you're going to get 10 different answers for, a gray area, in income tax. But we promote a lot of customer service first here, old school business values as far as, I don't want to say customer's always right, because in income tax, it is a mutual relationship, right? It's I'm hiring you as much as you're hiring me, with the criteria that we have to meet and our due diligence and the ethics that we have to abide by and whatnot. But other than just staying up on the legislation, experience, I feel, trumps all, right?
For sure.
I think experience is going to trump your degree, is going to trump, your A+ you got on your state exam to get your tax license, right? I'll take somebody that has the experience over, the, certificate or the paperwork any day of the week, because whatever situation you're in, I guarantee you it doesn't fit in that box
of course.
That they would teach you in a class, or the box that they give you. Okay, here are 3 different examples of the instructions that we just gave you, John and Mary. You know,
and then you're looking for
you're like,
none
dude,
of those are my options.
Yeah, that doesn't. But so in that scenario, John and Mary were able to take the credit, but my kid has a job, and my kid is not living at home, and they could take the education credit because their kid wasn't working and lived at home. So what do I do there? Let me just tell you, is the one industry I tell Joey this all the time. I couldn't imagine if I wasn't in the income tax industry how that would work out, me doing my own taxes. Now, knowing myself, I probably would think I did the best tax return still, even if I wasn't in the income tax industry.
Until you got the notice.
Yeah, exactly. Until I got the notice that says I owed $6,900 more or something like that. But
happens all the time.
Yeah, right, all day long. But from what IRS will promote and say that is acceptable or isn't, to what's actually filed, there's such a vast difference, right? They may, just to use the same education credit that I was thinking about a second ago, taking that into consideration, what the IRS will say qualifies or who qualifies to take that credit fits into these molds here, and you have to meet this criteria here. In actuality, buried in the legislation, there are so many different, there are dozens and dozens of more situations where, my verbiage is probably horrible right now, where you can still take the credit even though they're not identifying it to you, or they don't even know their own rules and regs because it's the interpretation of law, right? If somebody has all of their, 100% of their tuition covered by the military, right? Because dad was in the military somewhere, so they get the Cal Grant, but they also get, disabled veterans Cal Grant or something like that, right? I think 9 times out of 10, if you're doing your tax return, well, if you're doing your own tax return, 10 times out of 10, you're going to think, well, I don't qualify for the credit. The form is going to even dictate that as well, the 1098-T form that you'd receive. However, with disabled vets and the Cal Grant, there is a way for us to still take a maximum credit there, right? That you can take on your tax return. It could be worth $2,500 extra, which is the maximum credit there for one individual. And you'd never know by just looking at the form, the paperwork, whatever, that exists for you still, right? And quite frankly, IRS didn't know existed for you either until, we have some court case precedent, But as of today, it does. You can do that, and that's just one small, tiny example. Right, little morsel. And
go on forever, and I think the biggest thing is just a lot of times if you do it yourself online, you're leaving a lot on the table. Yeah. Most of the time, either not just leaving a lot on the table, you just could be doing it incorrect. I have clients come in, they get notices saying they owe a bunch of money because they did a Schedule A and counted their rent that they pay as mortgage interest. Do you get what I'm saying? So that's wrong. Yeah. That's not how it works, unfortunately, Now, that notice they might get might be accurate, but that's what we come in. We're like, what? There's penalty abatement that we could do to potentially help you out. So there's things there that they probably won't know, and they'll just pay it all up. So there's a lot of money to be saved.
By all means, continue to do your own return, please. Right. And then you can. Because then we're here for you.
It keeps us here.
We'll abate your penalties. We'll fix your stuff with the IRS, and then we'll do the tax return for you again.
Do you feel like if someone comes to you right now that hasn't been using you guys, do you guys like to also look back at their old taxes to see if there was mistakes, even if they were working with another professional?
Oh, it's a requirement. I wouldn't sit down with anybody new without looking at their prior year returns. Me sitting down with a new client is contingent on me seeing your prior tax returns.
Sometimes they might not have them, so we have to try to get transcripts, but that's one of the things whenever we set up an appointment. There's always a way. They can contact their old tax preparer, know. But that's one of the requirements that we have our front desk staff do is when they call in a new client, we ask them when they come to their appointment to bring a minimum of their last 2 tax returns. If they have more, awesome. If they have a business, that's needed. Depreciation. There's a lot of things there that if you don't have it can mess you up.
Or here's a scenario, right? Real common. Yeah. Okay, like Joey was saying, you can call your old tax preparer to get your tax return. For everybody out there who still owes their old tax preparer money, right? Because they just didn't pay them or something went bad for some reason, or, hey, I got audited, so I don't think I need to pay you, or whatever the case is, there is still a way to get a copy of your tax return without having to go the route of calling the old accountant. Yeah, absolutely. So if that speaks to a very small percentage of you out there, then absolutely,
One of the best things I think you said before we even started this was like how other companies will make you fill out all these forms before you even sit down. And for you, you're like, no, if I have an opening, come sit with me, let's meet, and then we'll start figuring things out.
Sure.
And I think that's something that does separate, from you two. And it's with how crazy like business owners like I am, it's like, Joey, like, I need this, like, here's all my stuff, go through it. And it's like, I'm not paying attention to it. I don't know how people do it. Like, I just don't have the time, or I would be scared to lose money on the table.
Right.
Or I don't want to get audited.
Right. Yeah, that's like a huge fear. But yeah, if we're talking how, us as a company can separate, or have some defining qualities outside of another practice, sure. If you walk into most companies, I think, in the first part of January, and trust me, there are plenty of reasons why you need to file your return or get the ball rolling early January, right? IRS doesn't even accept a return till mid to late January, okay? It is if you are self-employed, right, sure, January 1st comes and you keep perfect, immaculate books. You can just print your profit and loss statement, and you could prepare your tax return for the current year in the first few days of January. But that isn't the norm for most people.
I know it's not with
me. I think I have like
a
10% of my clients, might do that. But what you see now, though, is the way the IRS's automated system works, which, maybe we'll get into that later, maybe we won't. That is really what dictates the terms in the industry, is their, 9 to 12 year outdated automated system, right? But once let's say you file your tax return, you have dependent children to claim. Once you've claimed that child, they're taken out of the system. So, if you're married with your wife, you guys have kids, you claim your kids, no problem. However, there is a percentage, right, that and not a small percentage that, isn't with their baby mama or spouse or whatever, right? And so we have the cat and mouse game of who's claiming the kid this year, who's taking Johnny, who's taking Sally, and am I entitled to it? Are you entitled to it? Well, I pay child support. Shouldn't I get it? Well, actually, the IRS says no, right? The support doesn't count. They're looking at physical custody. However, if dad decides to just take them. Yeah. There's nothing to stop them from doing so. If somebody walked into my office and I asked them all the right questions and, they said, no, here's my son and here's his information, I wouldn't think twice about claiming him. I would assume that dad has the ability or the right to claim his own child, right? Yeah. His own biological child. When in fact, maybe he doesn't. Maybe the child lives with mom. Dad just still has the info and he's trying to beat her to the punch, right? Yeah. So I go into all this, I say all this because if you can't electronically file your return till late January and you have mom and dad trying to beat the other one to the punch, whether in the right or in the wrong, right? Because everybody is entitled to representation, under the Taxpayer Bill of Rights, right? So most offices without your W-2 are going to tell you, you need to get your documentation first. Yeah. When you get all your documents together, come back, see us, and we can take care of everything. In here, heck no, absolutely not. I need you. I want you. I need you in here as soon as you're possibly willing to come in here, as long as you have last year's check stub, okay? We can calculate everything we need to do. We can prepare the whole return. As long as mortgages, right? Do we need to wait for a 1098 statement anymore? No, right? We can just log on to your user platform, look at your annual totals, and that's exactly what we'll transfer onto the 1098 statement, right? All the information is out there is what I'm saying now. It is far too common that I have a client walk in with zero paperwork now. We just log online and
just doing it there.
Yeah, pull everything up that we need to. And that way we have everything ready to go. The minute the go live date happens, we press send, and it's a done deal. And there's an issue or a hurdle that used to exist that now doesn't.
Because it's all online based now.
Well, online, and the fact that, I don't care if you have your W-2 or not, we can prepare the return. You
Yeah, we
know,
can
don't
get
let
it
any
done.
accountant out there tell you that he can't do the return as long as he has the info.
Yeah.
Yeah. Mhm.
And then, I mean, a lot of these people that follow me, and obviously I have a lot of real estate, followers, realtors, and stuff like that. A lot of people always say, like, oh, you got to save your receipts. You have to save your receipts. As an advice for someone that is in someone that has a lot of write-offs, is it better for them to save receipts, or is it better just to have one credit card or one debit card and then just give you guys bank statements at that point? Joey, why don't you ask this question, because I know you deal with that.
Yeah. Well, receipts, are obviously needed if you got questioned. If there's an exam. A lot of times I would prefer my clients to have it all kind of organized, itemized for me. That'd be awesome.
Mm-hmm.
But that's not real world, So I would have to, it's for bank statements, we would have to go through them, especially if it's a business card, right?
Mm-hmm.
It's like, well, let's just see what's what. What is this used for? Can we take this?
Mm-hmm.
Morning coffee. Things. There's a lot of things that you can't take that people will think that you can take. So it really just depends on going through it. But I prefer, if possible, clients to have everything set up. But that's not the real world, like I said. So yeah, going through bank statements is a lot easier than going through receipts.
Well, let me. I'll give you a technical breakdown on your answer. Technically, IRS does not accept bank records as sufficient substantiation for an expense. Okay, blanket statement, black and white. Okay. However, in an audit, if you have representation experience, you'll know that if you can substantiate over 50%, let's say 60 to 70% of whatever they're questioning, okay, with receipted documentation, meaning receipts, invoices, whatever the Internal Revenue Code dictates as far that would be considered sufficient substantiation, and you can come up with 60 to 70% of it. If to fill the void with the other 30-40%, all we have is bank statements. Here, IRS, I don't have this invoice. I had the other 60%, but I don't have the other 40%. But here, I can show you that I actually did spend the money on my bank statement. Most examiners, I would think more than most, right? And the majority of examiners are going to accept that as sufficient substantiation and give you credit for the deduction. Now, how we practice in office is different. I don't want a receipt at my desk.
Yeah.
Heck no. If you need me to add up receipts, yeah, we can do that for you, and I'll tell you how much I'm charging you an hour to do so, right? But I only say that because I think a lot of times people have the preconceived notion that, well, I need to bring all my receipts in, and we can tell you story upon story of, our clients, a guy backing his truck up to our front door, getting a dolly and unloading a file cabinet, and just thought it was easier to, wheel in his filing cabinet instead of, prepare documentation. So, we don't need receipts. We work for you. We're not the IRS. We do have due diligence to do, right? We have to ask you certain questions to make sure that what you're telling us, falls in line with what, we should be doing, and we're not drawing scrutiny to ourselves, right? But do we need to see receipts? No, absolutely not. However, you do need to hang on to them in case we're ever questioned, because we need some sort of firepower to represent you.
Do you feel like that's like you brought up earlier about the IRS being so behind with their systems? Do you think that is something that is behind of holding on to receipts and not just taking bank statements at this point in time, or?
Well, so the justification behind still needing receipts versus bank statement isn't really a function of them being behind the times, right? It's it's what an invoice or a receipt can substantiate that a bank statement entry cannot, right? So there's specific detail on an invoice that they want to see: date, time, name, that bank statement may just give you a straight across the line date and charge, right? Or the vendor, or sometimes the charge is coming from a merchant account, that and it's not really clear what the actual business or vendor is.
That's what I hate. When
Yeah,
I'm,
right,
like going
right,
down,
right.
I'm like, what is that?
Yeah, but I think credit card companies are getting better at that,
Yeah.
right? That you get their annual statement now, and they give you a pretty good breakdown, categorize, what your expenditures were, and they'll even total them for you annually now.
So do you think, obviously we want to help a little people out. What are the handful of mistakes you're seeing overall, obviously we can go on a million mistakes people make, but people that are walking into you that maybe filed by themselves or filed with someone else, what are the handful of mistakes you guys are seeing that could really save people some problems?
The handful of mistakes that they do on their own.
They do on their own, or they've done with other people,
practice,
or whatever that you're seeing that, you know what, like, you can't write off, like we were talking, making a joke, you can't write off your underwear. Like, that's not a write-off. Or, you
Is
know,
it though? What do you do for a living?
Exactly.
If you're in a different industry, potentially can be a write-off, you know.
Or, like, you know, something that you said, like filing in January. You know what I mean? Like, nothing's worse than, like, luckily I file in October, you know, which I
wow,
file,
you're
like,
really early.
I'm really early, exactly. We're really late. More really the late part. And so, like, you know, maybe getting here earlier, or, you know, filing in January and not wait until April, or those kind of items that you're not seeing.
Yeah, I mean, in general, I feel like the biggest, well, for Mike's practice, the biggest mistake I see is people don't schedule their appointment early enough, you know, because Mike has such a large practice, so people call in and they can't get in. Now, just in general, the mistake that people make, you know, on their tax return, when they're doing it themselves, is that what you're trying to get at? Yeah, I mean, it's many, you know, I mean, there can be a time where they mistype a social security number for a dependent, you know, and now their return got rejected, and they're like, what's going on? I don't know what to do now. I don't know what to do. And they're like, they think that they filed their tax return. We have clients that come. I have a client right now that I'm trying to help out that was assumed, she thought she filed her 15, 16, 17 tax return. It never got filed. You know, she even paid. She paid somebody to do it, you know, so she didn't do it herself. She paid somebody to do it. Never got filed. Never, you know, nothing. They paid for it and everything, and they didn't get filed. So now I have to come in and fix everything up.
So what happens when if someone, like, didn't file 15, 16, 17, 18, do they just pay penalties? Is there...
Depends.
It depends. And then can you catch those all back up? Or if you looked at someone's last taxes and saw, like, dude, you could have saved a lot of money. Can you refile taxes a year later, or...
Well, it depends. It has to be an open year.
Okay.
You know, I think the way it is
So
the current
an
year.
open year?
Yeah, it's the current year and 2 years back, if I'm correct, right? Yeah. Current year and 2 years back. So up to 16 right now.
Okay.
So 16, 17, and 18. If those are refunds, you can get all those back, you know, 16, 17. Now, if you owe, you're going to have to, obviously, for any of the years, you're going to have penalties and interest.
Well,
you know,
3 years from the date you filed.
Correct.
Okay, so, you know, if we're just filing 2014, you know, we've got 3 years to correct it, you know, before IRS. Now, just to clarify, right, and Joey brought up some good points. You can correct any return. You want to go correct your 1998 return? By all means, let's do so, right? However, if that correction results in a refund, they're not going to refund the money.
Oh, okay.
Okay, so you have a 3-year window to recoup any refunded correction. You know, that's going to come from an amendment. But there are many situations where you would still want to correct or amend a return more than 3 years backwards, just to make certain elections that don't result in a refund, to make certain to adjust certain, you know, accounting methods that don't result in a refund, right? So
I'm gonna No, like, that shuts off. Can we just shoot on this one and zoom in on the 4K? Yeah, okay, let's do that. Cool. No,
so pause or
no.
All right.
We don't pause anything.
Right.
Well, because so one camera. So if anyone's a camera nerds, you know this.
Junkie.
Yeah. So camcorders can shoot for a while. Something like that, like a mirrorless camera, overheats at 29 minutes.
Yeah.
So at 29 minutes, that will always shut off. So if you're ever doing something really long, you have to have camcorders, or it'll shut off.
Oh, that was like a for sure thing you were saying.
That's
like
a
for sure at 30 minutes it was going to go off.
At 29 minutes it shuts off. It always overheats. That's
I thought it was just like
no, that's how they all work.
Smack the side
no,
of the
that's how
TV,
they all work. So, but yeah, so I mean, I think the biggest thing is I think people are just like, you guys are kind of like the dentist. You know what I mean? Like, you don't want to go because you're scared because of the unknown factor. And, you know, and it's like, even with me, like, I'm kind of nervous right now. Joey's filing my taxes this week, and I'm like, I don't know, and I don't. It's like I don't even want to.
But what was your gross revenue, Adam? Do you want to share it? No, I'm joking.
I work really hard.
Yeah,
and I work really hard.
Yeah, I'll plead the fifth. Right.
So then my question to you, and then we were gonna shoot a 1 minute clip, but we're talking about it as a real estate agent. Like when I met Joey, I just became an LLC, and then last year we just flipped to an S corp. Like when is that for someone who's a business owner or someone who's a 1099 employee? When is the best time to switch from a nothing to an LLC to an S corp? What is the reasoning on switching from those?
He's the S corp expert. Yeah. So yes, like I mentioned earlier, you are the first S corp that I have. I do other businesses, a lot of businesses.
So why did you want to force me to?
Because of your gross. After it's all said and done, your profit.
Profit.
So we're trying to avoid self-employment tax.
Okay.
So
what is that number?
Okay.
Yeah.
Bigger picture.
Yes.
Okay. There are a myriad of reasons why you want to form an entity, right? If just outside looking in, the legal industry wants you to form day one. You can't form soon enough, right? Every business should be an LLC, an S corp, as a C corp, co-op, whatever. Because of liability, right? And liability is a big, huge issue, and so we're bridging industries, right, where we've got legal and accounting, and and like what you're trying to do, we all need to work together, right? I can't tell you how many other accountants, bookkeepers, attorneys we're in contact with, because of that. But attorneys will have an opinion that you need to form earlier. Accountants, we're only looking at the money. We only care. I mean,
that's your job.
Yeah, right. Whatever you want to call it, right? I let the money dictate the terms, right? So it obviously costs money to form a corporation. It costs money to maintain a corporation. And an added factor, we're in California, right? So majority of our clientele, they are California residents, right? So in California, and those of you who are entity or business owners will know, it costs $830 a year minimum with the FTB and the Secretary of State to just have a corporation. Even if it has zero income, you're doing zero with it, that's $830 a year, and that's only if you're filing your statement of information timely, because then they slap on another $250 on top of that, right? So assuming you're doing everything timely and you're meeting the criteria that they set up, you're talking $830 before you ever pay for the tax preparation. And this is in a year where you've owned your corporation for multiple years now. The year you form your corporation, right, you've got to pay to form it as well. And that can range from LegalZoom's, I don't know, $300 to $500 fee for the S corp, to sitting down with a corporate attorney, and spending a couple grand to have them tailor fit, make your entity to you, which is really a good gauge, right? That's the difference between sitting down with a law firm or a corporate attorney. I would think you're going to spend $2,000 minimum to form an entity versus, an online legal service like InkFile, Parasec.com, or everybody knows LegalZoom, right? So the liability issue, that really speaks to California's court, civil and criminal and, tax court, right? So it used to, filing an entity used to provide you with far more liability protection years ago than it does
now.
Today. Yeah. Right. Specifically, if we want specifics, and Joey can tell you this too, if you are in an industry where you're selling a product, an LLC and S corp still provides you with liability protection. Now, specifically, this is where I tell you I'm not an attorney. Seek legal counsel, right? But court case precedent dictates the terms there, right? In the state that we live in, and I won't get on a political soapbox at all, but where most courtrooms will side with a plaintiff, in a liability suit. That because of that, it has eaten away the liability protection an LLC or an S corp would provide you. And so, the accounting industry or anybody who knows what they're doing in income tax will tell you, we're not saying that the entity doesn't provide you with some liability protection. We're just saying that it doesn't provide you with any more than a sole proprietorship that doesn't cost you $830 a year is going to give you. So if liability is your main concern, then, buy more liability insurance, right? That's not when we're going to tell you to form, though, right? As far as we're concerned, we're going to look at the profit. Profit will dictate the terms. So we just talked about what it costs to form and maintain a corporation. So if money is the end all be all, what we're doing, it isn't in real life, but for what we're doing here to our clients, if money isn't the defining factor, isn't the end all be all, they better run for the door, right? So you at least want your accountant and tax guy, to be, concerned with finances, even if in other facets of life it is not, right? So where is that number? What is that number? Well, you have to be able to save enough money on your tax return by being a corporation that it beats out having the corporation, right? So if I spend $500 in forming a corporation because I did it online, plus $830 a year on the FTB website or Secretary of State. Well, what is that? I mean, we're accountants here, right? So we're up to
$1,300,
$1,350, right?
And then payroll that you're gonna have to pay.
Then payroll potentially. If you're an S corp owner, you're gonna have that reasonable compensation requirement. And
so now you're at $1,600, probably.
Right, and then the tax prep, right? So I mean, you could be generous and just say like a $2,000, right? So we have to at least save $2,000 or more, annually to be an S corp in California, right? It's got to make sense in our mind's eye, right?
Yeah.
If I have a client, we have our clientele that are solely going to rely on our counsel exclusively as to when they form their entities, then I'm going to tell you we have to be saving more than you're spending on the corporation. Normally, I mean, you can do the math, right? If you multiply the self-employment tax rate, which is 15.3%, okay, for a single member S corporation, normally for me, for my own clientele, I tell them right around $30,000 profit. Now, don't get me wrong, not gross income.
Yeah.
You can make $2 million gross revenue and have a loss, at the end of the day, right? But gross revenue doesn't matter. I'm looking at profit margin and not just a spike year. We're looking at upward trajectory. Either we're going to stay here. I'm profiting $30,000 this year, and it's either going to be this or more moving forward in the future, as far as I can see. Even if they know for the next 3 years it's going to be this, and then we're going to have a precipitous drop off, well, that's fine. We can dissolve an entity, no problem. It is easy to navigate. Well, I don't say it's easy, but I mean, you can navigate the IRS, state, and all the criteria so long as you're being compliant, right? The horror stories and the reputation that they have are born out of non-compliancy, right? They're born out of individuals who are ignoring them, who aren't being compliant with the notices, because when it really comes down to it at the core, right, whether it's this industry or anything else, if you can read and follow instructions, you got it made, right? I mean, actually what we do, that's the service we provide, right, is we are reading the instructions and applying those instructions to a form that has to be filled out, which is why if you are a competent, individual, right, you can file your own tax return because you can read and then follow instructions. There does come a point in time, with entities, with resolution, with, some income tax, that the legislation or the instruction is Chinese, and not to,
another
PC,
language,
right? Another language. So, and if that's the case, then sure, you would need some professional help, some defining help there to guide you along the way. But, I mean, that's exactly why we have an industry now. We have a business now, because they've made it so
hard,
difficult to not only, okay, I understand what you're saying, but then there's interpretation of that law as well now, so.
So note to self, if anyone who's watching this is profiting over $30,000 a year, you need to be an LLC or an S corp immediately.
Not necessarily LLC, just S corp.
An S corp immediately.
Yeah, correct. Right.
So $30,000 a year, guys. If you at the end of the year, you need to become an S corp.
Yeah. So I'll put the disclaimer out there. As far as our counsel would be concerned, right? not taking liability into consideration. If you are a single member entity, or maybe you're already an LLC, because that's another thing I think most people don't understand, right, is that an LLC does not exist with the IRS, does not exist with the federal government, okay? That is a California, it is or any other state, it is a state-only entity, right? So that means if you have an LLC, state of California or whatever state you reside in sees you as a limited liability corporation. However, IRS still sees you as a sole proprietor, DBA. You're still, Jenny from the block or whatever.
Perfect.
Yeah, right.
And that's something I think people get confused. I know I do. You know what I mean? Like when this whole started, the hard part I think really when you go into the LLC and the S corp and being a business owner, it's that like, you're kind of making it up as you go. And that's why, like, I just lean on you guys so much because, like, I have no idea. Yeah. Like, when Joey tells me what I need to do, I go, okay. Like, sure. I don't make those decisions because I feel like that's the way I work in real estate. It's like, I'm the expert. Just let me take care. And, like, same thing with you guys. I have no idea how to file my taxes correctly. Yeah. And then I don't even know what write-offs are. I just go, like, Joey, like, here you go. Like, if you can write off, great. If not, great. Right. Probably I bet one of the lines you guys always get tired of is, like, write off as much as you can. So it's something, and obviously everyone's always scared of getting audited, but it's like, is that a common thing? Like, what's the percentage of people even getting audited? You know what I mean? And does it happen more when people file by themselves because they have more red flags?
I don't know the national percentage.
Yes, of course.
I know, like, in our office, I mean, it's like a 1%, if that, like.
It's a 2.7% national average.
Is it 2.7? Okay, 2.7 national average audit rate.
As of last year.
Yeah.
Yeah, so, but your question, sorry, what was your question again?
The question is that do you see it more happening or the fear of it? Always people are trying to write off as much as possible.
Sure.
And there's so many, like, walkabout red flags and all these other things, obviously, because they want to.
Red flag.
Everything's a red flag. But now, like, like Mike just said, like 2.7% get audited.
Well, I think the biggest thing is, so that fear, I think, stems from somebody who's already been audited. Do you know what I'm saying? So they might have had a preparer that did something shady or something that shouldn't have been done, and then they get hit. And then they come to us and, like, don't do anything that's potentially going to get me in trouble.
Yeah.
You get that, or you get the other side, like, oh, I need every single write-off.
Write-off as possible.
But the ones that are typically, like, don't do anything too much are the ones that have already dealt with an audit that was maybe a fraudulent return or something inaccurate, not maybe intentionally fraudulent, but an inaccurate return.
Or they got scared somehow.
Or they got scared, so I try to assure them, like, hey, we're going to do everything by the book, but we're going to take everything that you are entitled to. Sure. We're not going to leave anything off the return because of fear.
You're scared,
Of fear, Now, that doesn't mean we're going to go and do crazy things because that's not how we work here,
Obviously, of course, because you don't want to start setting that reputation.
Exactly.
And all of a sudden, I'm assuming, like anything else, after you get red flagged once and then you get on the map of the IRS or whatever.
Well, sure, yeah. There's always outliers, right? There's always an outlier scenario with the IRS, or income tax in general. You would hope and pray that it's the federal government, unlimited resources.
Yeah.
Unlimited. I mean, they can move mountains if they wanted to, but oh wait, we have to track something for 3 years in a row. We have to know that 2 years ago you took an education credit. Yeah, we can't do that. But the and I'm glad you bring that up because that is a huge concern in the industry. Like we said, 2.7% national average is just taking, broad brush stroke, demographics across the whole country, right? And just saying, okay, what is for individual income tax? Now, mind you, if you red flag your return like a real red flag, right, you will absolutely get audited, right? And so that 2.7, which we typically speak to 3%, right? So that 3% is assuming there are no red flags on your return.
Okay.
So we don't want to get it twisted here, right? It's like if you can be wild and crazy on the return, absolutely, you will get audited. There are some varying degrees of, fabrication that, probably flies under the radar, will fly under the radar, I can tell you, right? And that the automated system can't make the distinction as to whether or not that's accurate or inaccurate, right? Because human beings don't look at our tax returns, right?
Yeah.
I mean, majority of tax returns, or 97% of returns, just get processed by a software processing system, a supercomputer, an algorithm, right, what have you. It will flag a return. That's where the red flag comes from, right? It will flag a return that doesn't fall within certain percentages or certain industry standards, based on your profession, right? If you're a plumber, if you're a real estate agent, if you are, you work for the CIA, right? I mean, every industry has their industry standards as far as income and expense. And so, and we could even get into where does IRS get that information. But if you fall outside of those parameters too much, right, just falling $1 outside of wherever they see the industry standard isn't going to cause an audit. We're talking thousands and thousands of dollars. Because who's to say that, you operate your, income and your livelihood as the rest of the industry does? Maybe you don't. Maybe you're well over. Maybe you're way under. It could be a number of different things. But if you don't red flag your return, assuming you don't red flag your return, right, 97% chance of never being audited. Random audits don't happen anymore, right, because it's a waste of government resources. When they brought random audits back a few years ago and then quickly did away with them because of funding, because you can get, the system can select a random audit and it might be, some 16-year-old that works at Best Buy. There's nothing to audit.
Yeah.
You know what I mean? Like, what are you going to look at? Yeah, he spelled his name right. Yeah, you got his date of birth right. Okay, good. You're on your way. So they stopped doing those, right? And not only that, I mean, we have the technology nowadays where we can sort some of that out. We should have we should sort some of that stuff out. But on the business end, for all you who are self-employed, the percentage is much greater. Now, they do lump businesses and individuals into the same category, right? Because to the IRS, if you're sole prop, LLC, or individual, it's all the same thing, right, to them. But if I have two tax returns side by side, one is an employee, a wage earner, completely dirty return. No red flags. Dirty as all get out. Maybe they know what is reported to the IRS and they know what isn't reported to the IRS. So if there are things, when I say reported, what I mean is in their national database, if they type in your social, what pops up, right? Your mortgage pops up. All of your income pops up. Anything that's on a reporting document obviously pops up, right? What you spent on union dues, does that pop up? No. What you gave to the church in tithes and offering, does that pop up? No. Did you sponsor your kids' baseball team? Does that pop? No. So there's certain things that they just have zero information on. The cash you made, if you operate a self-employed business and 60% of your revenue is documented, 40% is cash, does the 40% pop up? No. It's only, they're basing it off of what they see that's reported to them, right? So long as you are reporting everything and filing on your return that they can see and it all matches up, you can file a completely dirty return, with all kinds of expenses that didn't really exist and they would never know it. But if I put that return next to a completely honest, not one penny out of what was actually spent business return, right? You have a Schedule C or you have an LLC or an S Corp or whatever your business is, that completely clean, honest, done very well business return has a much greater percentage of chance that it would be questioned than the totally dirty wage earner, right? Businesses are just scrutinized more because it's next level preparation or running your own show.
And they're probably expecting you to play in the gray a lot more because you're a business owner, because you can move the numbers around.
You're controlling everything from the top down.
Exactly.
You are the employer and the employee for most businesses.
Exactly.
Right. Now, we do live in a nation where we're innocent until proven guilty, right? But with the IRS, it kind of does work a little bit backwards, where you will get a notice that has a dollar amount that you owe on there. And yeah, you are on the hook for that liability unless you can prove otherwise, you know. So you're guilty until you can prove your innocence there, you know.
For sure, man. Well, I think I've learned a lot from this just in a short amount of time. And the one thing I'm taking away from this, and I hope everyone else takes away, is your taxes are very difficult. And there's a lot of money that can be on the table or can cost you a lot of money. So instead of trying to do it on your own, it costs nothing to sit down with these guys. Just have a conversation. Try to meet with someone that you can trust as a professional. And that's why I wanted to have these guys on, because I trust them with my taxes. So I definitely know who they are and who they work with. But remember, guys, file early. If you're an S Corp, if you're making $30,000 profit, become an S Corp. And make sure you're working with a professional that is not going to throw a red flag out there, and it is going to save you the most amount of possible. So thank you guys. I really appreciate the time.
Yeah, Adam.
And
thanks for having us
today. Fun, dude.
That's
you guys
cool.
have a good time?
Right on. Yeah, that was awesome.
Perfect. So awesome, man. Cool.
Next one section. Next time we'll do the 1031.
Yeah, 1031.
1031 exchanges.
Yeah, thanks.